morning office kellam sir. We are coming from office, huh? Okay, morning Josh is not available. Last time, good evening. Good evening. Fine. Quite happy to see the response in a short span of 2-3 days, where we are able to reach students. Okay, today I'm very much thankful to FAPSI for inviting me as a guest speaker for understanding the basics of stock markets. And I'm quite happy to see all my previous students also. Okay, in fact, I hope they are able to recognize me that I am only Praveen who taught you SFM. Okay, so don't think that he is someone else in the blazer. Actually, he used to come in t-shirts and all. He is not Praveen sir. No, I am only Praveen. Okay, so most of you knows whoever is my students, they know about stock market basics and all. But let us have a quick recap of what we have learned in your final. And those who are going to be my students will understand half of the syllabus, what we are going to teach in CA final SFM. Fine. Before starting the trading in the stock markets or investing in the stock markets, what is the first thing what one needs to have? Demat account, information, no. Insider news, no. Patience, no. See, you are seeing only one angle, I am showing another angle. Praveen classes, right answer. I have to go on. Fine, the one thing very much required for starting equity markets investment is one needs to have a life insurance policy. Okay, so even if you commit suicide or even if you die, someone will be there to save your family. Okay, do buy a house, LPS policy, life insurance before you invest in stock markets. But just for a joke, okay, there is nothing like taking huge losses. Only one thing required to make money in the markets is patience. Okay, understanding the fundamentals of a company, understand the fundamentals of an economy, and sticking to the fundamentals. Okay, not carried away by your emotions. People have a lot of emotions, especially when investment is moving up and down every second. So one needs to have to control their emotion. Stock kone churu kodtinga. At bak churu kodmano. If you see that now, you will get tempted. Oh, stock price kadpot now. You should not get carried away by your emotions. Okay, we'll move on to see what are the fundamental factors one needs to see before going for stock markets. It is a investor awareness program. You can find one investor is quite happy, another investor is making huge losses. He is breaking his head, about to break his head. Okay, what is the difference between these two guys? Okay, let's move on. You will go down, again you will go, another hill you will go down. That roller coaster ride is called the bull market. Okay, so market prices will make you enjoy the ride. You will really enjoy, because any stock what you bought will make you huge profits. For example, you might be knowing real estate sector. Real estate once upon a time in 2003 to 2007, 2008 period, prices was skyrocketing, right? Okay, anyone invested in the stock of real estate companies, the amount of returns have gone up more than 300-400 times. We'll go through the numbers. But what happens? You are really enjoying the ride in the S-way, and finally you will end up here where there is nothing is available. Okay, you will just enjoy your lost ride and landing up in nowhere. Okay, this is a kind of bull market. Every bull market ends with a tragic stories if you are carried away by your emotions. That is a key thing. Let's move on. What is the understanding of markets? Because people come to markets just to make money. That is fine. Everyone is there to make money only. Markets are also there to make money. You are buying a share means you are taking the ownership of the company. So you are eligible to, or you are taking a risk of investing in the stock. That company management may do very well or may not do very well. If they do very well, company will make profit and you will make profit. Stock price is the function of top line and bottom line. If the company sales goes up, then you will be happy. If the company prices crashed, then the management will be in trouble. Unfortunately, you are the shareholder, not in the management, you will also be in trouble. Take the example of Sfm computers. Price has crashed from 600 rupees to 6 rupees in 2 months time. You are not in the management, you are thinking everything is going good and all, ended up with the 6 rupees portfolio. Of course, the price has gone up later when Tech Mahindra announced a merger with it. So before we go to this, let us have a look at how does the economic cycle works. Okay, understanding the stock market is nothing but understanding the economy. Okay, economy is the one thing which drives the stock prices. Okay, if you go back to see in 86 when Sensex started, index was not moving. Let us go back to last 10 years, how does the cycles impacted the markets? It was in 2003-2004 when I started tracking the stock markets. Sensex was at 3,000, 4,000 points. We'll complete later how does the calculation of index happens. So I was trying to understand why does the Sensex keeps goes up and down. What is the reasons behind it? And slowly economic boom started from 2003 to 2008. Okay, where GDP has gone up from 1 trillion to 1.8 trillion. Okay, that is a growth of, you can say, around 8% GDP growth per annum. GDP refers to gross domestic product. So immediately stock markets also goes up, and after that you might be knowing we have seen recession in the Indian economy driven by US recession, that is a US subprime crisis. Okay, the subprime crisis affected USA, and when USA sinks, no, it will not sink alone. It will take half of the global economy with it. Okay, that is a specialty of USA. So when US is in trouble, whole world went into deepest troubles and the markets crashed. And it's been 6 years, 2008 till date, we are seeing the longest bull market in India. Okay, hopefully what is the going forward, what is going to happen? That's what we'll have a look at after a couple of minutes. Now, where does the economic cycle starts? There is no beginning of cycle, there is cycle, no, you don't know where the cycle started, right? We'll have a look at the lower inflation. The inflation is, what is inflation? Anyone? Rising prices, one answer. Too much of money chasing too few goods. There is more money in the market and less availability of the product. We have given a break. You all went for buying a coffee or buying a masala dosa. There is only one dosa available. You will say, I will pay 20 rupees. He will pay 30. She will pay 50. He will pay 100. Why the prices are going up? Why? How come he is able to increase the prices? Because there is more money with you and less product available with the producer. Okay. That is where you will find the prices are shooting up. Now, first economic cycle, let us take example. There is no inflation in the economy. Why there is no inflation? Because there is no money supply in the economy. There is lesser money in the supply economy. Why lesser money supply? The logic is quite simple. RBI has not minted more money. Okay. It was in 1950s or 1990s also, you can imagine, where you might be well aware. 1990s, if you have 100 rupees in your pocket, people were treating you a rich fellow, right? Today, even if you have 1000 rupees, who cares? No one cares, even if you have 1000 rupees. The value of money reduced. Now, question is, how does that money has come to your pocket? Who is a producer of money? None other than RBI. When RBI means more money, money comes to circulation among the public. Okay, how does it happen, sir? Very simple. Huh? You cannot go to RBI and say, please give some money. Huh? They will kick you out. Okay, they will produce the money and they will circulate among the banks in the form of repo rates. The rate of the RBI charges from banks is called repo rate. They produce more money. Why more money, sir? Let us complete. How come they produce more money and give it to banks? Reduce interest rates. Banks are the mediators for monetization. They borrow money from RBI and they give it to individuals, corporates. Corporates include the producers of the goods. Individuals include the consumers who are buying those goods. Okay. In other words, banks lend money for example, let us take Tata Motors. You wanted to buy a car. In India, 90% of the cars people are buying are financed by banks. It means if interest rate cut has happened by RBI, many people will be eligible to buy that loans, take that cars. Now, Tata Motors company needs money for producing the car. They will also go to SBI for capital expenditure loan, and we will also go to SBI only for buying that car. In both cases, SBI is going to be benefited by increasing the cars demand, or you can say vehicles demand in India. Same thing happens for real estate as well. Okay, housing companies, Unitech or DLF or Purvankara projects or Brigade Shobha developers, these projects are not funded by their own pocket. They are getting loans from bank and starting the project. Once you qualify your CA, you will also buy a property by taking loan only. Correct? By taking loan only. In both cases, the banks will be benefited. Okay. So what happens? RBI will come out with a rate cut which is expected to happen, very soon. RBI will come out with rate cut. When the rate cut happens, more money will be pumped into the market. When more money pumped into the market, both consumers and corporates will be taking that loan. Then what happens? There will be more money supply within the economy, within the borders of India. Yes, more money supply. When there is a more money supply, you remember, go to your CPT economics, hoping that all of you are having the basic of economics. Coming back to CPT, basic of economics once again. Say, when there is a, one day you went and asked for masala dosa, he raised the prices. Second day he raised the prices. Third day what he will do, he will increase his output. He will go for expansion. There is much more demand from the public for buying cars, from the public for buying houses. So he will go for expansion plans. When a company goes for expansion plans, expecting more demand from public because they are having more money with them. For example, some 30 years back, there was no BMW in India. There was no Audi in India. Nissan, no Toyota. Now all are coming to India because there is more money with Indians now. Okay, because economy itself is growing. I don't expect BMW showroom in somewhere in the suburbs of, small district levels. Okay, at Vongol, Chittoor, Nellore, you will not find BMW showroom because there is no demand from the consumers. On exactly similar lines, increase in GDP because there is a more money with the public. Continuation. Yes, somewhere RBI pumped up money expecting that GDP will boost. It will go for mismatch because money supply can be increased overnight, but not GDP. It will take 3 years for construction of a plant. So when mismatch happens, RBI thinks, oh, we are going to see overheating of the economy. Yes, an economy should grow at the expected level of 8 to 9%. If you are going at 15, 20, 25 like China, where they are going to see deepest troubles in the next 2 to 3 years. Already few companies have went for default, especially copper manufacturing companies. Second, if you are growing beyond your capacity like Japan, in 1980s, Japanese economy grew very fast beyond their capacity, minted more money, GDP is quite well. The problem starts, the consumption will be stopped at one point of time. I mean to say, if everyone buys cars in India, there won't be no demand for cars, no demand for housing. So how to increase the money supply? You have to increase slowly, so that you will be growing constantly, consistently and forever. Okay, forever. This is where high inflation, if there is increase in GDP, same RBI will come back to take back the money from the market. Okay, how sir? Cost will go up on the debit side of the P&L account. In that case, what happens? Decrease money supply. Yes, money supply decreased, inflation will cool off. Okay, this is how the cycles keep continuing. Sometimes it normally takes 4.5 to 5 years for economy to take one cycle. Sometimes it may take more than that also. It may stuck up in a range where RBI will have no clue whether we should increase the rates or not, even though higher inflation is there. Sometimes it may take bit longer time also to complete a cycle. Okay. Now, moving ahead, can someone tell me where are we in this cycle? In Indian economy, where are we now? Low inflation. Yes, the answer is right. We are at low inflation. In the month of December, the inflation number is at 9-month low at 5.5%, and recent figure is 4.0 for 4.5. This is enough reason for RBI to go with the rate cut on April 1st monetary policy review. Okay, the whole India is waiting for rate cut because if rate cut happens, interest rate will be cut, money supply will increase, we are going to see boom in the economy. At least for next 3 years, we will be having increase in GDP. Okay, now we need some policy makers who can increase the capacity of India, which will be able to absorb the excess money supply in the market. Okay, now moving on. Move on. Sir, what is the stock market, sir? Logic is simple. What is the vegetable market? What is the vegetable market? How many of you have not been to vegetable market? Abhi tak nahi gaya. It's so sad. Before you understand stock markets, you need to visit a nearby vegetable market. Okay. Logic is quite simple. Companies who are in need of money, they will come to stock market for raising funds. And whoever buys the stock, when they find that company is doing well, they will be happy to hold on. If they find that company's profits will get affected because of any reasons, they will exit from the company. Now, who will be buying, sir? Someone else is thinking in the opposite direction. Simple logic. There are two persons in the market, the buyer and the seller. Buyer thinks he is right, seller thinks he is also right. So who is right? It will come to know after some time, depend on their karma theory. Okay. So depend on your karma, you will be right or you will be wrong. Okay. The buyer is the guy who expects the price will go up. He is called Mr. Bull. The seller is the guy who expects stock price will fall. He is called the bear. Okay. Fine. Move on. A stock is a small share that represents the partial ownership of the company. That is what you learn in your IPCC law, basics of Companies Act. A stock market is a place where buying and selling of stocks takes place. That is not the stocks, that is vegetable market, but the logic remains same. Only difference is that in vegetable market, at least you have something to get even if the prices falls. In equity market, you will have nothing to get when the price of the stock falls. No difference. And coming back here, vegetable market is a physical market and stock market is online. Okay, online means you remember OLX, where buyer meets seller. Some people are saying we can sell our politicians also in OLX. Okay. Next. Next. What are the major markets in India? We have two stock exchanges, major stock exchanges. Yeah, Hyderabad stock exchange also there, but not much active. I hope it is. I think it shut down. One is Bombay Stock Exchange, started in the year 1950s by three stockbrokers under a banyan tree. That is where Indian economy. What is the first company traded in Indian stock markets? First company in 1850s traded in Indian stock market. It is East India Company. Okay. Now you have Sensex, which is a barometer of Indian stock markets for considering 30 stocks, and Nifty, which is having NSE 50, having 50 stocks in the weightages. Moving ahead, you normally seeing something. Okay, go back to your childhood days. Go back to childhood days. Your mother will ask your neighbor. Your neighbor has just come from vegetable market. What is the question? First question she will ask. Rate ela unnai. Correct? She will not ask what is the carrot rate, tomato rate, onion rate, no, any other rates. She will say, what is the rates? Rates ela unnai. That means we are going to see what happened to the overall market. Then she will reply, rates are too much rates, or rates are quite low. Okay, fine. Moving ahead, how does the pricing of a stock happens? Simple, huh? You go to vegetable market. You will ask what is the price of a tomato. What he will say? 10 rupees per kg. What you will do? You will bargain. You won't leave it there, right? 9 rupees istava. Will you pay for 8 rupees? Okay. Let us suppose you will try to bargain. Okay, I will pay only 7 rupees. 10 rupees is quite high. I will not buy at 10 rupees. Then he will say, tomato, this is called your tomato. Have you ever seen tomato? Popo, correct? Same thing happens in the stock market also. I mean to say, no one will say popo and all. I mean to say the bargain will continue. Okay. The buyers and sellers meeting online at 9:15 in the morning and they will be fighting together until 3:30. The pricing starts here. At 9:15 I have taken the order book of Tata Motors only. Here you can find there is a buy quantity on the left hand side. That was 2 days before I have taken the screenshot. You can see market depth. This is called order book of the stock. Order book of the stock. Here the first buyer is at 393.40. He is the guy who wanted to buy the shares and take delivery and keep it for long term. He is the guy who is bullish on the Tata Motors stock. Who is the seller? We don't know. We don't need to know also. Okay, online they will ensure that delivery will happen properly. The seller is at 363. Now what will happen? Buyer will wait for some time. Wait, let him come down. Because 20 paisa also makes profit, right? Makes a big amount. So what he will do? Either he will increase the price to 0.70, 393.70, or he will reduce the price to 393.40. Depend on the market demand. Remember, coming back to vegetable example, you quoted you will buy at 8 rupees, he quoted he will buy at 10 rupees. What you will say? Ichi rate cheppavaya antam. Final rate cheppantam. What final rate 9 rupees antadu. Then we will say 8.5. Are ichi rate ga cheppadu adindi. You ask final rate, I give final rate. No. From final rate also we will try to bargain, right? Okay. Now, if it is your necessity to buy the onion or tomato urgently, for example, your wife called you and said, Evandi, where are you? I have to go to my office. You are jobless. I have to work for home. Immediately what you will do? You will say, okay darling, okay, hold on 1 second. I am talking to you. I am trying for bargain. She will call you, stupid, come fast. You are bargaining for 1 rupee. So the buying pressure will make you to put the buy order at 10 rupees also. Or sellers will dominate the market. You can keep seeing in newspapers, stock market bhari ammakalu antaru. Okay, huge sell-off in stock markets. When there is a sell-off in stock market, it doesn't mean that there is only sellers. There are buyers also, but sellers dominated the market from the right-hand side of the order book. Okay, now how it happens? When company changes the fundamentals, or when there is something bad happens for investment climate. Sir, how sir? For example, you might be knowing Ukraine getting attacked by Russia. That is bad for Indian economy. How? The investors who invest in the stock markets in India, they will find that, oh my god, this may lead to any other issues. It is better to stay away from risky assets of equities and we will go back to RF. We will go back to investment in Government of India bonds. People withdraw the money and they will go back to investment in the RF, which will make them to sell the stocks. You can find total number of buyers at 50,179 and sellers at 65,176. This kind of trading will keep continue till 3:30, from morning 9:15 to 3:30. Bid price, the buyer price is called bid price and ask price, and once the deal matches, once the order matches, the deal is done. Buyer will get the shares within 3 days, seller has to give the shares within 3 days. Okay, the volume means number of shares traded. Here the volume is not given. Can you observe? Number of shares traded is not available. These are all pending orders. These are all pending orders. Top 5 you can see online in the website. Next, trading terminology. Open price. If you go and see any paper, they will be giving one series of news, series of numbers. Okay, these numbers are open price. At 9:15, at what rate the buyer met seller? High. There will be keep on buying in the daytime. The prices may go up, or on that day there may be sellers. Prices may fall. That is a high price, highest during the trading day, and the lowest the stock price has traded during the day. Close the last trade price of the stock for the day at 3:30. We have taken the example of Tata Steel. This was taken at 11:13 in the morning. Can you see the time? 11:13 as on 20th of March. 354.80 is the price. Previous close 356. Open 357 and high 359. Low is 353. So where is the close? Close will be available now because it was taken at 11:20. No. So if you go now and check the website, they will be seeing the closing price. Why the sell-off is happened? There are 6,000 reasons why market prices will be reacted. Okay, out of that we will see few reasons. These are few reasons. So you may be seeing something called return of the stock and all. You bought a stock at 100 rupees, and every day stock price will be keep trading, and by year end, if the company reported very good profits, stock price will go to 120, leading to return of 20% on 1st of January to 31st of December. Okay, 31st December. There is another return also people talks about in Mumbai. Okay, it was somewhere after the markets crashed in 2008. In the month of April 2008, markets are crashing every day because of US decision. So all our investors community, investment analysts sitting in Mumbai, we were all thinking कि अरे यार ये market बहुत हालत खराब हो गया यार, markets are crashing every day. Now what to do? One day we all met in a hotel for dinner, and one of my friend is thinking, Praveen, any stocks to buy? I said, अरे I bought a stock. Everyone is making losses. I bought a stock. Stock has given 40% return in 1 week's time. He was surprised. It is not only he
More than 15-20 people came surrounded and said, "Oh my God, the market is falling every day. How come your stock has given 40% return in 1 month time?" I said, "Yes, it has given in 1 month time." They were shouting, "You should have told us. We could have recovered our losses, sir." I repeated the statement once again. I bought a stock. It has given a return of 40% of the investment. They are trying to kick me. "Idiot, you are making fun of us." This is to happen. I still remember some jokes on the markets. When the markets were falling every day in 2008, people invented some new video game. The video, the Play Store video game, where that game is like in BSc building, people will be jumping from the building. You have to save. The game is for 1 minute. You have to see how many people you are able to save. You will be given one basket. You score, I will save 20 people. I saved 30 people. No exaggeration. That is a common thing in the bear market. In front of my eyes, I have seen people commit suicides. Building metal towers. One guy is standing on the top of the floor. The moment market is set for the crash, the whole Mumbai will get alerted. Police will get calls and people will get messages. If anyone is going to suicide, please let us know. Okay. Tallest buildings in the city will be covered by police. So you cannot jump also. See what will happen if you go to tallest building, they will take you and put in the jail. Once the bull market starts only, they will leave you outside. Okay. And the most problem is that even if you jump also, they will nets. You will be in the net only. Okay, you will not die. They don't allow you to die properly. When you are making huge losses, that is the biggest problem in stock markets. All the bridges, railway tracks, canals, full petrol, railway, police patrolling will be there. You can't even escape. I still remember one day I was working with one of the best analysts in Mumbai, Madhumita Ghosh. She has seen one guy is on the top of the floor, 22nd floor, about to jump. She said, "Hey, Praveen, come. You see what happened, ma'am? You see one guy is about to jump. He's jumping. How come you are excited? Why you are so happy?" That is the problem where they don't understand what is positive, what is negative. Finally, that guy jumped, and there was no net, and people were able to catch him. He was falling, and they would take him to hospital. After that, he was joined in his jail continuously. Fine. That's not a big deal. If you are able to have discipline in the stock markets, you know why, the reason why I have committed. I will tell you 10 trading mantras which you are not supposed to do even in the bear market or in the tremendous bull market. Okay, there are 10 trading mantras one needs to follow. Moving ahead, sir, if you are able to find a very good stock, fundamentally very good company, stock price is the function of profits and sales. If the company is able to do very well with profits and sales, absolutely no need to worry about the stock price movements. Okay, because there is the underlying value with the company. See, I'll ask you a simple question. Russia attacked Ukraine and the markets crashed. There will be 1 or 2 days disturbance will be there in the markets. Investors will go for sell-off. It doesn't mean that the company working in Hyderabad selling a toothpaste or selling toothbrush, they will not be able to make losses. Is it required? So unless you are perfect in fundamentals, don't enter the markets. If you find fundamentals are good, don't leave the stock. Stick on to it. Because of these factors, market prices have fallen. Buy few more. See, normal psychology is if you buy anything for a lesser price, cheaper price, you will buy, right? But in the stocks, what will happen? When something is available cheaper, we will get carried away emotion, thinking the price will fall further. If it falls further, buy few more. Buy few more. Buy few more. One of my students came and met me yesterday and said that, "Sir, I want to sell my property and buy some stocks." I said, "But if you want to do one thing, you start investing, you will automatically sell your property." It happens automatically. No need to do. I have to do. Okay, let's come back. So these are the common things happens in the market. You can see here bull is dominating and kicking the bear. Bull market is a market where the prices of the stocks are continuously rising. Yes, when the stocks are continuously rising, be extremely careful. Any day it is going for collapse. Okay, so how to be careful? Again, we'll come back to trading mantras in another half an hour's time. Come down. What is the bear market? Prices will continuously fall. Yesterday 100 rupees, today 90. Tomorrow you'll pay 70. Day after 80. I still remember one of my friends went for marriage. He has bought stock of Patel Engineering in the month of May 2006. He went to Bihar and came back to Mumbai. After 1 month, he did not see his portfolio. The stock price of Patel Engineering has crashed from 600 to 300. I still remember the question he asked, Praveen, ये company कुछ bonus दिया क्या? I said, idiot, you check your demat account. Number of shares, 100 shares remain same. There is no bonus here. The stock price will automatically off. Okay. Now, so bear market also one needs to be careful. How to make money in the bear market? Very simple. You can do something called short selling. Or if you are able to spot bear market is going to come, keep calm. Keep absolutely calm. Sir, control చేసుకోలేకపోతున్నాం now, sir. అయినా సరే calm కూర్చోవాలి. Okay. I told you one needs to have patience in investing in the stock markets. Now, a bull market indicates a constant upward movement in the stock price, and a bear market indicates falling prices. Sir, there are 6,000 companies in the market. How to pick a good company? I'll tell you one thing. You pick up a company, I will tell you whether it is good or bad after 1 year. Because after 1 year, automatically you will get to know whether you have made a profit or whether you made a loss. One guy came and asked, sir, give me a risk-free company in the market. Post office is not a stock market, no. So there is nothing called risk-free investment in the market. Every investment comes with a risk. Okay, you have to take some risk to get some return. Now, if you are investing in RF, how much return you will get? 8%. If you are senior citizen, you will get 8.5. If you are women SSE, some banks, bank of what is that? Bharatiya Mahila Bank. They will offer you 0.5 extra for women. And the woman may not be your woman, may not be your wife, it may be your girlfriend also. But be careful, Okay. She may be having fixed deposits of 5 of her boyfriends and she will run away with 6th boyfriend. Okay, don't come to me and say, sir, you only said that invest on your girlfriend's name. I am not responsible. Okay, don't come and ask me. So the interest rate what you get from the highest interest rate is being a senior citizen or woman, you will get 8.5, 8.75. If you want to make investment in the stock market, you are taking risk. No. If you are taking risk, obviously you will expect a higher return. What is the return what you will expect from the stock market? Tell me. More than 8 is a logical answer. Tell me something else. How much return you can expect from stock markets? 20%? 33%? 50%? Excellent answer. Depend on the risk, but again I am asking you the max student what you expected. 100%. You are the people what market needs. Remember one statement. Remember one statement. 95% of the people lose money in the markets. Balance 5% are conservative investors. Getting 100% return. One guy came to me yesterday and said, sir, my dad gave 10,000 for investment. My ambition is that I want to make it 1 crore by the time I complete the CA final. It is a contradictory statement. The CA final will take maximum of 5 years, 6 years because result is 3%, right? Okay, remember that statement. Result is 3%. On the same day as president of ICA, he was telling the result will be much more tougher. And how much 3%? I was making students to scare in the class. The result will be 3%. Be careful. You know what student is saying? Sir, 3% result undi. Maximum what they will do? They will make it 2% or they will make it 1%. But anyway, we will not be in that 90. We will all be in that 3% also, no? So what difference it makes for us? It makes no difference, right? Already we booked our seat in 97%. So who the hell cares whether the 1% passed or not? I was about to ask the same question. Sir, what difference it makes? You make it 2 or you make it 1, you make it 0%. Will anyone feel bad? Nothing will happen. Keep writing, nothing will happen. Fine. So 95% of the people lose money in the market, so balance of 5%. So how to be in that 5%? Again we will see in trading mantras one needs to follow while investing in the market. Fine. So how to pick a stock out of 6,000 listed companies, sir? that is much more higher than traded companies. The companies suspended from trading is much more higher. These are the companies which came to public issue long back with a lot of ambition to create the empires, and the promoters ran away with public money. Okay, those companies are there, listed, stock price also trading, people are also buying and selling and burning the fingers. Hardly you will find some 2000, 2500 companies which are actually doing the business and making the profit or loss. Fine. So out of that, how to pick up a company? Logic is quite simple. Before you enter the stock market, you have to see where are we in the economic cycle. If we are in the overheating of GDP at 12-13%, where everyone is talking about stock. It was in 1992 when Arshad Mehta scam. Everyone is talking about stocks. Even the rickshaw puller is buying stocks. Auto wala buying stocks. Chai fellow buying stocks. I said a few of my relatives also does not know what is the spelling of a share, also buying stocks. And ended up in burning their fingers in the markets and making the people to have fear. You don't enter the markets, people lose money. Yes, people are losing money, but some people are gaining, no? Why did you do CA? Why are you doing CA? 3% are passing, we want to be in the 3%. That is not our ambition, right? Okay, coming back to this example, how to pick up a stock. You have to see where are we in the GDP cycle. Inflation, interest rates are going to fall or increase. Second one, exports. What is the advantage of exports? India, no one is consuming goods. Still you can export to foreign customers. You will find a lot of Indians who does not have breakfast also because to save money. That is the consumption patterns of Asians. So still you can export goods to Americans, Europeans. Okay, so export market you have to see. Government policies. What is the short-term capital gain? What is the long-term capital gain? What is the tax benefit? What you will get in section 80C and all? Is it recommended to invest? You will get 1 lakh if you invest, you will get 70,000 1 lakh exemption, which net investment or already you have got 30% by tax evasion, which is the model. Fine. After seeing the economy factors, you have to see which sectors will do very well. For example, coming forward, in India, banking sector is going to do very well. What is the logic, sir? Logic is quite simple. We are in the economic cycle where interest rates are going to fall. When interest rate falls, first they will give money for banks, then banks will lend money for companies, and the companies will increase the production, and consumers will take loan. So before it will take 3-4 months for the public to raise money, banks are already making money. Correct? So the banking stocks are expected to do very well. You have seen banking companies are expected to very well. Then, after finding out banks, which sector, which stock we can buy, you have to buy single stock, right? Which stock you can buy. The size of the company, bigger the better. It is better to buy the large cap stocks which are having the proven fundamentals, proven track record, rather than buying the startup companies. You don't know where the startup company is going to end its business. For example, if you take Infosys, is it a bigger company? Yes. In 1991, when Infosys came out with IPO, no one knows what is this company does. People do not know what is a software. I still remember in 96-97, people are asking what is a computer? What does computer do? Is it TV? Okay, it is not TV, how it is a computer. What is the purpose of it? Now, today, it is the biggest company in India. Simply putting, if someone is able to spot Infosys is a very good company at that time, investment of 10,000 will be making you by this time how much?
3 crores. 2 to 300 crores.
What are 500 crores? This is too much. But the limit control. Emotion control చేసుకోవాలి. Market కదా మనం చెప్పినట్టు ఎంతో. Okay. You have to listen what market says. Okay, you have to control your emotions. 500 crores, it will be 6 crores. I mean to say, by the time when you are born, if your dad invested 10,000 in Infosys, no point in doing this CA 3% results, going for morning class, evening class, going for audit, getting scolding from the client's boss, claiming 20 rupees car expenditure, tax expenditure. No point in having these kind of things, no. But unfortunately, your dad did not know Infosys will go up like that, because there are 1,000 companies who came to public issue in 1991. Only Infosys is able to sustain in this kind of run. In fact, I will give you an example. Narayana Murthy, you know. Narayana Murthy. Not our company director Narayana Murthy. Okay, not Narayana Murthy, N. Narayana Murthy, Infosys, head of Infosys, chairman. You remember one provision in your Companies Act, if a company is coming for IPO, they have to subscribe up to 90% of the capital. If the people are not subscribing, you have to withdraw from the IPO. So what Narayana Murthy was doing is, he asked his friends, "Arey, if you are not buying my company, I will not talk to you." He asked his maid servant also, "Okay, I am paying a 5,000 rupees salary, you have to buy 2 months salary in the stock, otherwise you are removed from my employment." So including the maid servant, including his car driver also bought 10,000 shares. Otherwise I lose my job. So he made his car driver, watchman, maid servant, everyone to buy the stock. Fortunately, what happened? The company's stock prices has gone up drastically in such a way that his car driver is having the wealth of 10 crores. Still, he is doing car driver job only. What these people is thinking is, oh my God, he made me crorepati. Are a fool? When the issue was not subscribed, he made you to buy. If that is not invested properly, if the company went into losses, you will lose heavily, no? Okay, but anyway, now he is saying about it. I am the wealth creator for my, but people who are working for me. I am the guy who made my maid servant richer. No, it is them who made him richer. Okay, come back. Now, size of the company, the bigger the better. Promoters, Promoters, company promoted by Ramling Raju. Because he was thrown out of Satyam board, the company was acquired by someone else. Will you buy the stock? Yes, sir. What do? You will buy the stock if it is not your money. If it is someone else's money, we will say, chalo, we will buy, we will make him more losses. If you have any anger on someone, some of your relatives, bring them to stock markets. Automatically, you will be happy after 2-3 years. Okay, that is the one thing one needs to do. You don't like your uncle because he is not allowing you to get married to his daughter. Okay, go to uncle and bring him for stock markets. I will manage the show, and your uncle will make him on the roads. Then you will say, see, you did not allow my student to make your daughter's marriage. Fine. Coming back here, the promoters' history and background. Who are the best promoters of India? Tatas. No doubt about Reliance. Sure, don't Reliance. Tatas are the best promoters of India. Come back. Financials. You have to see what is the ratios, what is the expectation of the company, that is the projections, what is the growth the company has achieved in the past 10 years, whether the company is doing on par with industry, and the projections. Who will make projections? Investment analysts make projections, and the company MDs also give some projections on the fundamentals of the company. And valuations, last but not least, you cannot buy a stock just because it is having all good parameters. You have to see what is the value of the company. For example, considering the EPS, say once you are qualified, and the question is only for girls, once you are qualified, your CA, you will get 2 matches, sir. Mr. A and Mr. B. Mr. A is getting a salary of 10 lakhs, B is getting a salary of 20 lakhs, sir. Whom do you prefer? Both. No, the question is for girls only. Some boys and both. Tamil or something different, be careful. You can't say I will prefer both. You have to opt one, right? Whom do you prefer? We will prefer B, right? 20 lakh salary. Sorry, if you marry to the guy who is earning more, we will be happy, no? We will prefer A. Then your dad went and asked her, what is the dowry? A said, I want 1 crore dowry. That is 10 times of his earnings. B asked her, I want 4 crore dowries. That is 20 times of his earnings. Then he will come back and say, B is very much greedy, sir. He is too much, aseku, sir. He is very much greedy on making money, sir. This is very bad, sir. A chala manchod, sir. A is a nice person, sir. And the double money, sir. Who needs money, sir? When you opted for B, that time you are not greedy. When he said more dowry, he is greedy. Okay, hey Panda, that's a Nicola, we don't know. Anyway, let's come back to stocks. A means A limited, B means B limited. So A the earnings are 10, stock price is 100 rupees. That is 10 times it is quoting. It will take 10 years for you to recover the money in the form of EPS. Coming to B, B is quoting at the price of 20 rupees and quoting at a stock price of 400 rupees. Okay, the stock is highly valued it will take much more time for you to recover in the form of increase in the revenues of the company. It is recommended to buy the low priced stock, provided fundamentals are good. Okay, fundamentals are not good. SNIA you need just to blindly believe on PE ratio and buy. If the future earning capacity is good, still you can go for the low price skip, because market is at recognize the fundamentals of the company. Some companies market will not recognize. It will take some time for the market to realize that yes, this is a good company. So before everyone buy, you buy and hold on, and before everyone sells, you sell. Okay, move on. We keep saying no, market crashed, Sensex crashed, correct? Whenever you put television, they will be showing some screen. Market will be standing in front of BSC. You know, a common photo, that photo will be keep published everywhere, correct? And you will be seeing some stockbroker, he will be sitting like this, and computer will be screen will be like this, he will be doing like this. Okay, sometimes I feel that is a pic only taken for the purpose of putting in newspaper. Okay, so why Sensex crashes or why it goes up? Recently, I have seen 1 week back Sensex touched all-time high of how many points? 22,000 plus. Okay, the reason was? The reason is? Sorry? The reason is Narendra Modi touched the stock market. It is not Narendra Modi which touched the market. It is the non-performing government is leaving the market. Okay, the government which did not do anything for the past 10 years, finally they are leaving. That is itself is a good news, right? Okay, and exit polls said that we are going to see good growth in Indian economy. Fine. That is coming back to macro factors. So when economy itself is increased, that is one reason. Second reason is inflation is coming down. That is a good sign that we are going to see huge recovery in the money supply in the market. Move on. Sensex is calculated taking the 30 companies, the top 30 on the basis of market capitalization. Okay, if market cap is higher, it will be included in the index. We will see computation part. Just have a look at it. It started in 1986. Most of you might not have been born also in 1986. Started with 100 points, and the 30 companies keep on changing every 6 months. With 31st company has become 30th company in market cap, it will take place in the 30th. We buy 100. What is the weight? Take Reliance. Reliance is having some market cap. What is the market cap? CMP into number of shares. Okay, current market price into number of shares available in the market. In other words, it is the amount you want to spend for buying the whole Reliance. Yeah, you want to buy whole Reliance, that is the amount you have to spend. It is approximately 1.7 lakh crores. In other words, you have to do one 2G scam to buy that company. Or you have to do another, you can say 10 Commonwealth scams to buy that company. Okay. In other words, he will not sell also. You will go and ask Mukesh, Mukesh, I want to buy. Who is Mukesh? Mukesh means Mukesh Ambani. Some people think, no, Mukesh. Mukesh Babu. Not that Mukesh. Mukesh means Mukesh Ambani. If you go and ask Mukesh, I want to buy a whole company, he will say, who the hell are you? Even if you pay amount also, he will not sell. That is a, what we can say, market cap, the wealth of the company in the market. Okay. So, that wealth of the company in the market, take 30 companies total and make a total, which is approximately 16 lakh crores in India. Fine. 16 lakh crores in India. So, weight by 100 into the stock price yesterday was 100 rupees. Let us say Reliance price is 100 rupees. Today the price is 104. There is appreciation of how much? 4%. So, take that 4% by 100. Change by 100 means change compared to previous close into Sensex previous close. That will give you how many points this stock has contributed for the Sensex. Okay. Now go on. Go on. Now we will see simple example of how does this computation happens. You can see TCS. All of you able to see numbers? Okay. TCS the previous close is 2122 and today the price has gone up to 2040. There is a gain of, you can the numbers there is small change here. It is close is previous close. The column changed. Okay. So there is a gain of 81 rupees in the stock price. The weight is 6%. How did you calculate the weight? This is a total of 30 companies in the Sensex. Okay. So market cap by total. Okay, total 30 here, only we have taken 5 here for ease of visibility. Fine. So weight and total weight is equal to 100. And change number of rupees it has changed and change percentage 3.84 2.3% change. Like 100 price went up to 102 103. Points contribution. Some stocks have contributed more, some stocks have contributed less. The total is 73. I think it is 173. Okay, total happens to be 173 points contribution. So if previous close is 22,000, that is yesterday's close, and today's close is it has gone up by 173 points in total. So it will add to Sensex. Then if the stock prices are keep on going up every day, stock prices are bound to go up, and index also is bound to go up, depend on the percentage weight of the stock in the Sensex, and the Sensex will go to all-time high. It means every stock is going up. Okay. In other words, come back to our example. You will go to stockbroker's office. You will ask market MND, market क्या हुआ? They will not give Reliance gone up, Infosys gone down, SBI gone down, Tata Steel gone up. You will keep telling only. He will say the weighted average market is up by 170 points. It is as good as your mother will be asking your neighbor, rate kala unnai, rates kaisa hai? In the vegetable market, he will say rates are quite high. Rates are very high. Same thing happens in the stock market. They will see Sensex calculation, which will be the barometer of all the stocks in the market. Okay. Now, the Sensex started journey in 1986. 1986 at 100 points. Slowly the buying started, and Sensex gone up to 4,200 points by 6 years by 1992. Anyone knows the reason why? It is because of Harshad Mehta's scam, not because of the fundamentals. Immediately, the prices have fallen drastically. The Sensex have fallen drastically from 4,250 to 1,200 points. Because this is a scam done by Harshad Mehta in the equity markets. Okay. Anyway, if you have time permits, we will have some other session to discuss Harshad Mehta's scam in detail. Because being a CS or CS, we should know what scams are happening in India, so that we will do the scam properly, so that no one can catch us. Unfortunately, if you don't know how to do scam, no, people will catch you. Okay, fine. No, this is for fun. We should not do all kinds of these stuff. So someday you will caught. Fine. By 2003, Sensex was at 4,000 points only, and the reforms continued, and the foreign money has chased Indian stocks, and the market prices of the stock has gone up to 21,000 by 2007 December itself. And after that, recession hit, driven by US subprime mortgage crisis, and the prices crashed to 6,000 by 2008 October, 6,800. And again bounced back, continued the recovery of US economy as well as global economy, and markets today climbed with good fundamentals of India at 22,000. Hope because market will expect something and react. Market is expecting good growth in India. That's why market is taking positive news from good government going forward after 2 months, and markets are rising. If tomorrow some bad news happens, then the fall will be continued. Now, what are the sectors we have? We have a lot of sectors in the stock market. For example, we have capital goods, that is construction equipment, or crane manufacturing companies, or infrastructure companies, power generation companies, power plantation companies and all. We have companies in banking sector, where SBI, Punjab National Bank, private sector banks like ICICI, Axis Bank, and your Kotak Mahindra Bank, S Bank and all. We have energy companies like ONGC, NTPC, and Reliance Industries Limited, NHPC, and conglomerate like ITC. ITC is a company which is into hotels, textile. What is the textile brand of ITC? John Place. Okay, they are into hotels also. You might be seeing ITC, Grand Cafeteria and all. Fine. Moving back, there are various types of sectors. Which sectors will do very well? You have to buy. We will be seeing in this session what are the sectors which will impact and what are the reasons each sector will move on. Okay, each sector is subject to something called cyclicality in the business. Each sector is subject to cyclicality. Move on. What are the sectors and what are cyclical? Starting with banking sector. Remember one thing, as I said, for recovery of any economy, it should start with bouncing back of banking sector, because money supply will start from RBI to banks first, and banks will lend money for the normal public. So any bull market will be started by bank stocks. Yes. Any bear market also will be started by banking stocks only. For example, they kept on giving money for real estate sector, which is booming very well. One day what happens, real estate prices will fall. People will go for default on the loans now. When the property price is falling, will you pay your loan? What maximum banker will do? They will sell now. Let them sell. Okay. So you will go for default on the loan. This is the reason why American economy also crashed on subprime crisis. Okay. So going on to this, the factors inflation. If inflation is higher, interest rates will also be higher. There will be less money supply available with the public. If there is lower inflation like current situation in the past 3 months, can someone give me what is the reason for lower inflation in the last 3 months? What is the exact reason why we have seen lowest inflation in the past 3 months? Sorry? Exactly. Who said? Agriculture production has increased tremendously because we have seen excellent monsoon from July to October period. So that output will come to market by December, January. So the market is reacting to that and inflation numbers are coming down. So we are going to see lowering interest rates and GDP also. Banking is a proxy for any economy. If economy is doing well, banks are supposed to do very well because they are also participating in the economic cycle. If banks are doing bad, economy is doing bad because people are not paying the loans and there is no much money available for lending for the public. Fine. And the money supply credit growth both are same. How much money RBI is lending for the public for spending purposes? For every rupee RBI is minting money, you are becoming debtor to the RBI. Simple reason. Coming back, and NPS, you know very well, if the amount is not paid, the bank will make losses. That also you have to see before taking a decision on banking stock. These are the key drivers of the banking sector. Next, what are the listed banks available, sir? We have more than 30 listed banks available. 15 are government banks and 15 are private sector banks, sir. The PSU banks are, the private sector banks are the banks where government has no control on it. The management is by private people, where FIs are also holding some stakes. Start with ICICI, you know very well, HDFC, Axis Bank, S Bank, IndusInd Bank. These are the new banks, this IndusInd Bank, S Bank is a pretty new bank, S Bank is a stock which has come to IPO in 2004 at the price of 40 rupees. Yes, I said from 2004 to till date, till 2008 we have seen economic bull run. By 2008, the stock price has gone up from 40 rupees to 550 rupees. A return of more than 1000%, not 10 times. And now the stock is available at 350 because we are in the economic recession. Yes, we are going to see the recovery now. We are going to see the recovery. That is the good news for all of you. By another 6 months or 1 year, there will be huge bounce back in the economy. Even if political factors are good or bad, the economy is supposed to bounce back. And PSP banks, PSU banks, where the government holding is not less than 51%. When I say government holding, it is not held in the name of government of India only. It can be by state governments also. Okay. So there are few private these government banks which are listed in the stock markets. Now we keep on saying, no, last 1 month we have seen recovery, inflation numbers have come down, political factors are very well, the recovery has started. Just to see the return from 18th February, the stock price had taken for Axis Bank, S Bank, IndusInd Bank, and SBI. 3 private sector banks and 1 PSU bank. The returns are, you just see the graph, started with 0. The return has gone up to 25% return in 1 month time. Okay, this is where one needs to understand economic cycles. If you are in my Facebook or if you are in my WhatsApp groups, I message the people to buy S Bank stock at 320, expecting that recovery is going to come. Recovery is going to come. Stock price has gone up to now 360, 360, 55 levels. Hold on. Economic boom is just started. Hold on for next 2 to 3 years. Stock price may reach to 700 to 750 rupees. Same is the case with any banking stock. Same is with any banking stock. Move on. Next sector, the best sector I would say FMCG. Sir, banking sector is something a problem, no, because you don't know when economic recovery will start. You don't know when economic fall will start. But I am telling you, if at all you want to be in the stock market, you need to understand economic cycles. Without economic cycles, what will happen if you invest in the stock markets? You will lose money to someone who understands economic cycles. Okay, so be extremely careful in dealing in the stock market. FMCG, the best sector I would say. Why, sir? Fast moving consumer goods, the demand remains safe. You will not find a person who is not doing brushing just because economy is a decision. Have you ever seen? अरे आज ब्रश नहीं किया क्यों? अरे GDP गिर गया यार, उसलिए मैंने ब्रश नहीं किया. No, you have to do brushing whether you have a job or not. That is the beauty. Even if you have a job, you will not make brushing 10 times in a day. Okay, so you have to buy so and so number of toothbrushes, toothpastes in a month. And you will not find someone who is not taking bath because economy is a decision. No, whether you have a job or not, you have to buy at least 2 to 3 soaps per month, depend on the frequency of bathing. Okay, that frequency will not change. Economy boom, recession, Manmohan Singh, Unnada, Poyana, no one bothers. You will be doing the procedure, you will be continuing with your consumption patterns.